Assalamu'alaikum warahmatullahi wabarakatuh. Hello everyone, we are from Group 1 of Advanced Financial Accounting 1 to present about the case of C14 determination of goodwill impairment. First, let me introduce myself and my members. My name is Raihan Sidkiraditya and my members are Maria Wong, Nadratul Hikmah, and Shifa Fauzia. So the case of determination of goodwill impairment, Plush Corporation purchased 100% of Common Corporation's common stock on January 1, 20X3 and paid $450,000. The fair value of Common's identifiable net asset at the date was $4,003,300. By the end of 20X5, the fair value of Common, which Plush considers to be a reporting unit, had increased to $485,000. However, Plush external auditor made a passing comment to the company's chief accountant that Plush might need to recognize impairment of goodwill on one or more of its investment. Required, prepare a memo to Plush chief accountant indicating the test used in determining whether goodwill has been impaired. Include in your discussion one or more possible conditions under which Plush might be required to recognize impairment of goodwill on its investment in Common Corporation. In preparing your memo, review the current accounting literature, including authoritative pronouncement of the FASB and other appropriate bodies. Support your discussion with citation and quotation from the applicable literature. First will be explained by Maria. To Maria, time is yours.
Thank you, Raihan. So the memo is to the Chief of Accountant and the Plush Corporation from Christensen CPA and to determining impairment of goodwill. So after goodwill is recorded in a business combination, it must be recorded in accordance with FASB statement number 142. Goodwill is pursuing at its original amount without amortization unless it is impaired. The amount determined to be goodwill in a business combination must be assigned to the reporting units of the acquiring entity that are expected to benefit from the synergies of the combination. We can say the total amount referred to goodwill may be divided between a number of reporting units. Goodwill assigned to each reporting unit must be tested for impairment annually, and between the annual test in the event circumstances arise that would lead to a possible decrease in the fair value of the reporting unit below its current amount. So next will be explained by Raihan. Raihan, time is yours.
Thank you, Maria. So for the next is goodwill is not considered impaired if the reporting unit's fair value is more significant than its carrying value. A second test is required if the fair value is less than the carrying value. If the carrying amount of writing unit goodwill exceeds the implied fair value of that goodwill, an impairment loss must be reported. And FASB 142 paragraph 20 ASC 350, 20, 35, and 11. Next is will be presented by Nada. To Nada, time is yours.
Okay. Next. On acquisition date of Plush Corporation recognized goodwill of $20,000 and allocated to a single business unit. Although the fair value of the reporting unit has increased to $485,000 as of December 31, 20X5. Plush Corporation is required to conduct a goodwill impairment test if the carrying amount of Plush investment in the reporting unit exceeds this amount. This will be the case if the book value were $500,000. In the second test, the fair value of the reporting unit's net asset, excluding goodwill, is subtracted from the reporting unit's fair value, 485, to determine the amount of implied goodwill that at that date. If the fair value of the net asset is less than $465,000, the amount of implied goodwill greater than $20,000, and no goodwill impairment is assumed. On the other hand, if the fair value of the net asset is greater than $465,000, the amount of implied goodwill is less than $20,000, and an impairment of goodwill must be recorded. Next will be explained by Kak Shifa.
Okay, guys, so with the information provided, we do not know if there has been an impairment of the goodwill, so it will be involved in the purchase of common corporations. So, however, the plus must follow the procedures outlined about testing for impairment at December 31 and 20X5. So, the primary auditions is the Financial Accounting Standards Board number 142 is the ASC is 350 and also 20, 35 and 11. So the ASB number 142 par, the number is 28, and also the ASC is 350, 20, 35 and 30. And the last is the ASB number 142. The par value is 35, the 34, and also the ASC is 350, 20, 35 and 41.
Okay, I think that's all from us. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.